Welcome to the Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner, host here on the Professional Edge for north of 5 years. Appreciate your time and listening in. And this session, we're going to talk about conservative investors 411. What do we need to know as a conservative investor? We've had two incredible years in the stock market, 20+% returns annualized for the past 2 years. And this year it's shaping up to be another good year for the equity investors. But as we all know, individuals rally when all these gains come into their accounts. But what practices or what instruments can you put in place to protect those gains? We all know that if you have a stock and it goes up in value, it could immediately go down in value. And we all know that it goes down in value quicker than it goes up. So as a conservative investor, what's the 411? Well, here's one way to protect those gains. You have to put a stop limit in place. And that is basically, it says, hey, if this stock is trading at currently $100 per share, what we do is say, if it drops down 10%, so that's going to be a $10 price decrease, then it automatically sells at $90. And if the price continues to fall down to, let's say, $80, $70, $60, you automatically have that order in to protect your upside gains and lock in those gains, and that is called a stop order. Now, a lot of investors don't want to do that because the market volatility, they may say, hey, it's trading at currently $100 per share, and I know the market's volatile and it may bump around, or they may say, hey, I only want a 2% down. So therefore they get stopped out in the nomenclature in the market. They get stopped out at $98 a share, and then the volatility evaporates and the share price rises up over $100 to, let's say, $110 because the volatility was not any significant business matter. So they get stopped out, and now they lost that $10 upside from $100. So working with estate management counselors, we look at what the client's risk tolerance is and say, okay, if the market fluctuates 5% or less, we could care less. But if it fluctuates downward in a negative trend greater than 10%, let's stop out for a portion of the portfolio. So that's when we place that stop in there. It's automatic. It's not an emotional decision. It is a financial decision. So if you, as a conservative investor, do not have these stops in place, do give our office a call at 404-250-9798. That number again, 404-250-9798. And let's just have an initial candid conversation on how you, as a conservative investor, are protecting your portfolio. Now, being a tax attorney, we have to consider where we place this stop at in what account. Because if you have a brokerage account and you stop out at that $90 in our example, then it's a sale or disposition, and therefore it might be a taxable event depending on what you originally purchased that stock for. So if you bought it for $70, it's at $100. We put a stop in at 90, it sells at 90, you would have a capital gain of 20. Now, depending on your holding period, being greater than a year and a day, it would be treated as long-term capital gain, anywhere from 0, 15 to 20%. Or if you held it less than a year and a day, then it would be short-term capital gains and taxed as ordinary income. So where do we put these stops at? Well, obvious place to protect part of the portfolio would be inside a qualified account, meaning an IRA or a Roth IRA. So if it stops out at $90 inside that qualified account, it's not going to trigger a taxable event. And most of our listeners here on the Professional Edge have 90% of their net worth inside a qualified account. So we look at that and we say, all right, let's protect 2 years of spend or 3 years of spend in a down trend. So we place those, we analyze what the client's conservative aspects are, We put this in place and then we monitor it. And yes, the market may be volatile, and that's where we don't like to have, let's say, a 2% down limit order, because that could just be noise in the marketplace. So give our office a call at 404-250-9798. That number again, 404-250-9798. We can schedule a complimentary consultation to evaluate what exactly you've done to protect these gains within your portfolio and not trigger a significant taxable event. So that's one conservative investor 411 action that you should take. And again, at the end of the tax year, we have some tax planning that conservative investors should do. You should capture any capital losses. Go ahead and sell that security, but make sure you don't trigger the wash sale, because we may like the stock that we bought and it declined in value, and we want to capture or recognize that loss in the portfolio. So we go ahead and sell it, but the individual wants to buy it back. Well, we can't trigger the wash sale rule, which basically says we can't buy it back or put an option to buy it back 30 days prior to trade date or 30 days after the trade date. So it's a 91-day window to avoid the wash sale rule with regard to securities transactions. So if that wash sale rule is unfamiliar to you, that might be a wake-up call to give our office a call to begin working with myself, tax attorney, CPA, and certified financial planner in the management of your portfolio. And we are a fee-based investment advisory firm. So therefore, we don't have commissions on any securities that we sell to our clients. We are a fee-based fiduciary. We act in the client's best interest. So is that something you are considering as a conservative investor going forward in 2026 as we wrap up 2025? Do give our office a call at 404-250-9798. That number again, 404-250-9798. So, conservative investor 411. Here's the other one. The Fed just reduced rates down another 25 basis points. So, majority of CDs come mature in November, December of each calendar year. So, when you receive your renewal notice, guess what? The bank is not going to be giving you that 5% CD rate. So what do you do now? It's probably going to be 3.5%. We know inflation has been on the move, and it was hyperinflation this past year, not in 2025, but 2024, heading into the first quarter of 2025, and now it's sort of tempered a bit. So if I'm going to get a 3.5% CD rate on after-tax money, well, let's run the numbers real quick for you, the conservative investor. Well, I get 3.5%. Let's use $100,000 CD. That's $3,500 that you would get. Well, that's not all that you're going to get, because if it's an after-tax CD, then we have to pay income tax on that $3,500. So quick math, 30% federal and state tax rate, 30% of that is going to be about $1,000. So we're down to about $2,500 in return on a $100,000 CD. Well, I'm here to tell you that there are alternatives, and basically you're slowly going backwards, having a $100,000 CD at a 3.5% rate of return because of the inflation and the tax consequence. So what's the alternative for you, the conservative investor? Well, there are investment grade corporate bonds of a short-term duration that are yielding anywhere from 5 to 6.5%. Now, that's pretty decent, but remember, that would be taxable interest as well. You'd be definitely getting more interest income off that bond. Now, the downside is that the bonds are not FDIC insured, and you being the conservative investor buying the CDs, I know You bought these CDs, a couple of years ago when the interest rate was 4.5 to 5.10%. That was a great deal. So now when the renewal comes around, it's 3.5% where you're going to be. And there is an alternative, a short-term duration high yield bond fund, north of 5% yield. It's there all day. It's 100% liquid. There is no early surrender charge or withdrawal fee that a bank would charge on a CD. So those are there. And at Estate Management Counselors, we use a bond fund, not a single individual issue, to avoid some of that credit default risk. So if that's of interest to you as a conservative investor, let's evaluate what you're going to do when that CD matures. Give our office a call at 404-250-9798. That number again, 404-250-9798. Now, being a listener here on the Professional Edge, we're wrapping up 2025 pretty quickly, and 2026 is coming around. We have our New Year's resolutions. And if you had the New Year's resolution in 2025 to get your estate plan done, and guess what? We're at the end of the year and you didn't get it done. Well, as a listener, go to emcthebundle.com. That is Echo Mary Charlie, thebundle.com. And that will be a huge incentive for you to get that underway. It's a fixed price where we put your estate plan together, we review your portfolio, and we also, in writing, produce a tax strategy for you moving forward. Because you may be entering required minimum distribution or your required beginning date has started. Well, guess what? We need to plan your tax distribution strategy. Accumulation strategy is different from a distribution strategy. Being a tax attorney, a CPA, and certified financial planner, it definitely matters how you take your distributions from your IRA accounts. So again, I appreciate you listening to the Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner. More on conservative investors, 411 after the break.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Sean Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Sean, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Sean Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Sean is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Sean Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Sean Todd by calling 1-877-654-9798. That's 1-877-654-9798.